Were you kind of confident in what you heard from the executive team, or did it just further solidify some of the kind of glaring signals that are or red flags that might jump out to your team?
Yeah, so good morning. Thanks for having me. So clearly, as you mentioned, execution was the highlight in the quarter, drove a significant amount of the upside, just given some of the tepid volumes that we're seeing in the parcel volume area. As we kind of step back, that execution is really key in our mind. We have no idea what that macro is going to look like as we kind of move forward. But the execution that FedEx is doing with their Drive program is certainly, giving some results to the company, driving earnings in this tepid volume environment for them.
Allison, how big of a risk is this higher for a longer environment that we heard about from the Fed yesterday? The fact that that could really potentially weigh on consumer spending and then, of course, hit companies like FedEx. How are you assessing that risk?
Well, you even look at FedEx's earnings raise. Really, they just raised the low end of the guidance. So at the midpoint, they raised their guidance about 25 cents. They did keep the top end of the guidance, and it's really, reflective of sort of the concerns that you have out there today. And if you look at the revenue guidance, they did actually, even though they raised the low end of the guidance, they did lower the revenue guidance. And part of that, a big part of that's attributable to the consumer weakness out there today.
When you think about all of the different input costs that this company has to manage, we had heard from some of the airlines how they're navigating fuel expenses. Is that something that also is a headwind risk to the costs for FedEx?
Was certainly something they're always worried about. I would say they typically manage it through surcharges. So we would expect them to be able to pass that along to their customers.
How much more does that mean that we might be paying, or that the end consumer might be paying for? There's fresh Jordans to get delivered, or that, online order that is probably an overnight splurge. I'm not outing myself. I'm just saying other people who might be doing that.
Well, as you know, their pricing is moving higher, right? They already put out their rate increase for next year. They expect to capture a big piece of that, up around 5%. So, that will certainly continue to play a role in parcel demand and delivery costs going forward as well. So I would not expect it to come down materially, unfortunately.
Allison, we saw a little bit of a benefit there from UPS troubles. When we take a look at the ground division, 400,000 additional packages per day by the end of the quarter. This market share gain that we saw FedEx have this most recent quarter, is that something that you think they're going to be able to sustain?
Yeah, so when we talked to them, the significant diversion from UPS this quarter, what their approach was really try to lock that diversion, or those volumes into maybe a longer term contract. So it's not going to be easy, quite honestly, for UPS to pull it away. FedEx does acknowledge that some of it likely does kind of revert back, but they expect to hold on to the capture that they had this quarter.
In this kind of more mature phase of growth that you believe FedEx has entered, and transformation strategy, where would you say that they are at in that broader kind of time span or range, and where do you expect that we can actually see that start to trickle through to their financials?
Well, I would say, for one, take your first question last, is really you are starting to see, if you look at the incrementals in ground, they were north of 100% in terms of, what they were able to achieve there. I would say they're still very much in the early innings, right? Express, on the other side, they're still trying to kind of balance that supply and demand. Then the next leg is really that Network 2.0, where they're integrating that Express and ground networks. That will take time, but, I would say you still have a substantial runway over the next 5 years for them to right size and reorganize that cost structure.